people say I won't sell, or when should I sell? Bitcoin is a savings technology.
Yeah.
It's a savings account. It protects your wealth from the ravages of the stealth wealth tax of inflation. So when do you cash out your savings? Not every day. You don't cash out your savings to buy coffee. You don't cash out your savings to buy a shirt. You cash out your savings when you need to make a big investment, or you need to make a big purchase like college, or you want to fund a year's worth of retirement. And so the way Bitcoin is going to function is people are going to move their savings into Bitcoin.
Yeah.
It will continue to appreciate.
We find ourselves merely a few months into what many anticipate to be the most substantial cryptocurrency bull market in history. This moment presents a significant opportunity for investors to capitalize on their investments and further distance themselves from the swiftly deteriorating monetary system. While some cryptocurrency investors may seek to time the markets, aiming to exit at the peak before the inevitable downturns of bull markets, Mark Yusko, the founder, CIO, and managing director of Morgan Creek Capital Investments, offers a word of caution against such attempts, particularly if driven by frivolous reasons. During a recent interview with the Dow's Report, Yusko emphasized the importance of maintaining a long-term perspective on crypto investments, particularly in assets like Bitcoin, which he believes will form the cornerstone of the future global monetary system. Yusko asserts that Bitcoin's value will continue to appreciate, not solely due to its intrinsic value, but also because of the rapid devaluation of fiat currencies. He illustrates this point with examples such as the Turkish lira and the Argentine peso, both of which have experienced dramatic devaluations in the past year compared to Bitcoin. Moreover, Yusko discusses the significant influx of investments into Bitcoin facilitated by spot Bitcoin ETFs, foreseeing this trend as just the beginning of a flood of investments from institutional investors, including behemoths like BlackRock. Overall, Yusko maintains an extremely bullish outlook and holds lofty expectations for Bitcoin and other leading cryptocurrencies in the ongoing bull market. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
These are spot ETFs, meaning when BlackRock gets an order, or when Bitwise gets an order, Fidelity gets an order, they have to go find actual Bitcoin.
Yes.
They can't just buy futures contracts and pretend that they have Bitcoin. So what you're seeing in the last week is a mad scramble.
Yes.
Literally a mad scramble for Bitcoin, because in the first few days, actually first few weeks, every dollar that was coming in that BlackRock and Bitwise and Fidelity and Valkyrie had to buy, GBTC was selling, because they decided to keep their fee really high, because this was actually reasonably smart. I don't like it, but it was reasonably smart. They're like, look, the vast majority of our investors in GBTC, the trust, bought in at much, much lower prices. Every day, 200 million, 400 million, 500 million was coming out, and that was available to buy with the new inflows. Well, suddenly no one was selling GBTC, and they still had to come up with, on some days, 10,000 Bitcoin. There's only 900 created every day. So you had this massive supply-demand imbalance. And the rumor was yesterday or the day before that the OTC desks basically
were dry.
They just didn't have any Bitcoin to sell. I was on Kraken the other day, and I was swapping an old, I won't use the vernacular, but an old token that I thought was decent, and it turned out not to be, trying to swap it into Bitcoin. And it just kept saying, not available, not available. Now, it doesn't mean that they don't have any, but at the price, see, that's the thing. It's not that there's no Bitcoin. There's lots of Bitcoin. There's, call it 15 odd million. There have been 19 something million created, and there's somewhere between 3 and 5 million that have been lost or stolen. So there's 15 or 16 million Bitcoin. So there's plenty of Bitcoin. The problem is There's a whole bunch of them, 65 odd percent, that people have said, at this price, I'm not selling it. This is the thing that people are going to have a hard time wrapping their head around. And it's actually why my Twitter handle has hashtag 2.1 quadrillion, because that's how many Satoshis exist in the world. So there are 100 million Satoshis per Bitcoin. So there's 2.1 quadrillion, which is 12 zeros. That's a lot of zeros. Okay. Now, a Bitcoin at $1 million or $2 million or $5 million, I mean, literally, it's going to make people's head explode. They're not going to be able to I can't afford that. Well, you don't have to buy a Bitcoin. You can buy one Satoshi, one 100 millionth
of a Bitcoin.
Or you can buy 10 Satoshis or 100 Satoshis or 1,000. So what I think needs to happen is at some point we need to flick a switch and we need to start talking about Satoshis. And there was some writings in these emails that came out, from Satoshi Nakamoto himself that said the reason he picked the 21 million number is it kind of worked out to be global currency with a Satoshi equal to $1. That kind of works. And ultimately, I think today a Satoshi is like, 0.7 cents or something. I should be able to do that math, but I can't do it in my head. But over time, the idea that this thing is divisible to 100 million units is going to catch on and people are going to understand.
Meta's law, as proposed, suggests that the value of a network is directly proportional to the square of its user base. Applied to Bitcoin, this implies that as more individuals join the network, the value of Bitcoin will increase accordingly. With each new user, the utility and value of the network experience exponential growth. However, the magnitude of this exponential growth may be challenging for many to fully grasp. An illustrative example of exponential growth is the ancient story of an Indian king rewarding the inventor of chess with rice, doubling the amount on each subsequent square of the chessboard. While the reward seems modest initially, it quickly escalates to massive proportions, showcasing the power of exponential growth. Similarly, the concept is demonstrated by doubling drops of water in a football stadium every minute, culminating in the rapid filling of the stadium within a short span. Mark Yusko envisions the growth of the Bitcoin network in the coming years and decades to follow a similar exponential trajectory. This growth is expected to be propelled initially by institutional investors entering through Bitcoin ETFs. Such exponential growth underscores the transformative potential of Bitcoin and its network effects.
The fact is, linear math isn't that bad. Exponential math is really hard for the brain to grasp. If I took 20 linear steps, right? 20 steps, I would be at the other side of my office.
Yep.
If I take 20 exponential steps, I go around the world twice. And people say that's bullshit. Like, just do the math. 2 to the 20th power, and you get a big number. If you look at its curve, it is exponential, right? And that point, it's exponential in two ways. One, it makes these big parabolas, and then it crashes, and it makes another parabola. But what it also does, it makes a parabolic Metcalfe's law curve, meaning going from $1 to $10 is a massive move, percentage-wise, right?
Yes.
10 times. Going from 10 to 20, that's another 10, but it's not that big a move.
Yeah.
So the law of large numbers starts to catch up. But here's the rub. Your point on how much money is coming in is really, really important. I believe this year, more fiat will be converted into Bitcoin, actual transaction, not paper, but actual transaction, than the history of Bitcoin. In the first 15 years, and I haven't done the math exactly and counted, but I think it's right around 300 billion. I think it's a little bit less than that. That's on $1.2 trillion of market cap. So we have 1.2 trillion. Like, well, but if it's 1.2 trillion, didn't 1.2 trillion come in? No, that's not the way it works, right? Because if I'm trying to put $1 in and you have $1 worth of Bitcoin,
Yeah.
you may say, you know what? I'm not selling it for $1. I'll sell it for $1.20. I'll sell it for $1.30. I'll sell it for $1.40. And so what happens is the people that came in early, right? They had to put a very small amount of money to get a huge amount of Bitcoin. In fact, some of them didn't have to put in any money because they mined it. And so as that then matures and people put new money in, then the amount of capital that converted to Bitcoin is a certain number. But then if you and I trade that same thing, we're not putting any new money in, right? So it's called a multiplier. And so some people have estimated that the multiplier is like 100. I don't think it's that high. So like if $1 comes in, the price goes up $100.
Yeah.
I don't think it's that high. I actually think it's a meaningful number. And so if you look at the last time we went from 10,000 to 60,000 back in 2020, only 10 billion came in. Think about that. The price quintupled, or sextupled actually, and we only brought in 10 billion into GBTC. This time we've already had more than 10 billion come in, and we went from 40 to 68. But why didn't we go up the same amount? Again, law of large numbers. But here's your point. How much is going to come in? I think this year, 300 billion, which again is more than all the money that's been converted in the past, comes in. Well, where's that 300 billion number come from? Not just out of the sky. There's 30 trillion with a T. And that's, remember, 1 trillion is $1 every second for 31,710 years. That's a lot. 30 trillion owned by us, boomers, controlled by our advisors, the UBS, the Merrill Lynch, the Vanguard, whatever.
Okay.
If those advisors say 1%, that's 300 billion.
Wow.
So it's not 10%, it's not 50%, 1%, which is a reasonably logical number. 2% is better, 3% is better, but 1 is logical. If 1% comes in, that's 300 billion. And that 300 billion, I think, will move the price materially more than 300 billion.
Mark Yusko has long been discussing the potential influx of $300 billion into Bitcoin and cryptocurrency since last year, predating the approval of spot Bitcoin ETFs. Since the approval, the anticipated numbers have begun to materialize. Recent data from BitMEX reveals that BlackRock alone has injected over $10 billion into its spot Bitcoin ETF since its launch in early January. Notably, on March 11th, the world's largest asset management firm recorded a staggering $500 million in inflows, marking the second highest daily record after the $673 million inflow on February 28th. However, these figures indicate just the beginning of a trend, with much more anticipated to come. The momentum surrounding institutional investment in Bitcoin and cryptocurrency appears to be gaining traction, suggesting a significant shift in the financial landscape. As this trend continues to unfold, it prompts reflection on the implications for the crypto market and traditional finance alike. Share your thoughts on the video in the comments section below, contributing to the ongoing discussion surrounding this evolving narrative. For more daily dose crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.